Hello everybody, this is Lara from Pure Elliott Wave with your daily analysis for Bitcoin and XRP. Technicals for Bitcoin, when we get into XRP, I'll give you a full Elliott Wave count there as well. Technicals on the daily for Bitcoin, it's moving up again with so far no increase in volume. It's only just gone 1 p.m. Eastern Standard Time though, so there's still a little ways to go. It's within a rectangle and it's been within the rectangle since it entered on 28th of February 2024, moving sideways with resistance 73,100, 71,500, support 56,500 to about 55,000, swinging from resistance to support and back again, currently within an upward swing. Do not expect it to move in a straight line. It may be choppy and overlapping. For example, this upward swing was choppy and overlapping, as was this upward swing. I expect overall choppy overlapping movement to get to resistance 73,100, and how price behaves when it gets there is going to be indicative as to whether or not we're going to have an upward breakout. Unfortunately, rectangles are plagued by numerous false breakouts. We had a false downward breakout here, upward swing, another false downward breakout here on this session, 7th of July, price closed below what was support then for the rectangle, and the very next session quickly moved back above and it's moving up back into the rectangle now. Because of those false downward breakouts, we could also see a false upward breakout, and so if price does close above 73,100 in the next couple of weeks or so, then I will wait to see 2 or 3 days up and away from resistance, which will turn into support before I have confidence that the breakout, not another false breakout. For the short term, there's been a little bit of an increase in volume pushing price higher. Now the last 2 red candlesticks day on day have a decline in volume, so volume is still for the short term to the upside. The current session is quite weak, but like I said, it's only just gone 1 p.m. Eastern Standard Time. ADX is declining, telling us that at the daily time frame there is no clear trend. The previous downward trend reached extreme but not very extreme. The DX lines have crossed over, indicating a potential change from down to up, but with the black ADX line still declining, no clear trend is indicated. At the last low, RSI had reached oversold and exhibited single bullish divergence with price. And the larger picture is a bull market, and when you look at the monthly time frame, Bitcoin is still in a bull market. Within a bull market, you have consolidations and pullbacks, and within those, when RSI reaches oversold, it tends to be the end of the consolidation or pullback. Within a bear market, RSI can reach oversold and price can continue on down, but we haven't got confirmation of change from bull to bear. So let's assume that this big sideways movement of the last few months is a consolidation within an ongoing larger bull market. This means that with RSI reaching oversold and exhibiting single bullish divergence, it's very likely that the last low is to be the end of the consolidation. Odds are I expect an upward breakout in coming weeks, maybe in the next 2 or 3 weeks. For the very short term, price is not yet at resistance, but stochastics is overbought. Because there's no clear trend, using a model of stochastics plus support and resistance, I'd expect a bit more upward movement overall until price reaches resistance and stochastics is still overbought simultaneously. And then let's see what ADX says. About once every 1 or 2 weeks, I'm going to cover my full Elliott Wave count at all time frames for XRP, giving you a full Elliott Wave analysis for this market. I start my Elliott Wave count in July 2014. From this low to this high, there's a fairly decent looking 5-wave impulse. 1, 2, 3, 4, triangle, 5. 2 is more time consuming than 4. That's okay. That's a really common feature for markets with extreme volatility. I'm used to seeing that in commodities. I've been analysing gold and oil for many years. It's even more extreme in cryptocurrencies. Their volatility is higher. That means that the 5th wave to end the impulse is so strong, it forces the 4th wave that comes just before it to quite often be more brief and shallow than its counterpart 2nd wave. So this is a normal look for an impulse in a cryptocurrency. 5-step forward pattern lasted 3 years. 3-step back pattern lasted 2 years. The proportion here between 1 and 2 is very good, and this downward movement subdivides nicely as a double zigzag. Following 2, a 3rd wave should unfold higher as an impulse for this main Elliott Wave count. Cycle 3 will be labelled primary 1, 2, 3, 4, 5, and it has to meet all of the core Elliott rules for that structure. Primary 1 was a leading diagonal, primary 2 a deep zigzag. 2 is less time consuming than cycle wave 2, 1 degree higher. This lasted 1 year and 2 months. Cycle 2 lasted 2 years. Cycle 2 was a 96% correction of 1, or 0.96 of 1. So primary 2 was 0.91 of primary 1. So the corrections are becoming less deep. I won't say more shallow because they're still deep. They're less deep and they're less time consuming, and that's exactly what you'd expect for a decent proportion and the right wave count. Primary 3 may only subdivide as an impulse. Intermediate 1, 2, 3, 4, 5 has to meet all of the core Elliott Wave rules for the structure. Intermediate 2 likely to be complete now, lasting 1 year, and 0.84 or 84% the depth of intermediate wave 1. So intermediate 2 is less deep and less time consuming than primary wave 2, 1 degree higher. It's overshot the lower edge of the base channel. That's okay. It's quickly returned back above. The targets are using previous ratios exhibited in this wave count. Within cycle wave 1, primary wave 3 is 14.72 times the length primary wave 1. If we see that same ratio exhibited between primary 3 and 1 within cycle 3, then a target would be 28.84. If we see that same ratio between cycle waves 1 and 3, then a target would be 40.67. Considering potential durations, using Fibonacci number sequence to consider how long these waves may last. If primary 3 lasts a Fibonacci 3 years, it may end November next year. If cycle 3 lasts a Fibonacci 8 years, it may end in March 2028. These are rough guidelines. Let's take a look at the weekly time frame for this wave count. The low of primary 2 is this point down here. Intermediate wave 1, a leading expanding diagonal. Intermediate wave 2, a triple zigzag, has a somewhat downward slope and has overshot the lower edge of the base channel. If intermediate 2 continues lower, it may not move beyond the start of 1 below 0.2794. Target here is the same as at the last chart. Let's have a look at this upward movement now at the daily time frame. The low of intermediate 2 is this point down here. Someone asked me in comments, how can you get closer to try and find the end of a movement? The only answer is you can use Fibonacci ratios to calculate a target for the fifth wave of an impulse to see when the 5-step forward pattern may complete. But I have a little bit of a problem with the question. It seems that the person is trying to aim to get in as early as possible and out as late as possible, trying to get as much of the movement as possible. I think you'd be much better off spending your time trying to focus on the middle of the movement and not trying to pick a low, and don't try and pick a high, and focus on risk management. It's boring, it's overlooked, but it's the most important aspect of trading, your risk management. You couldn't have used Fibonacci ratios to get a good target for the end of this fifth wave, and this is sometimes the problem. Here, Minuet wave 3 is 0.0100 shorter or less than 2.618 times the length of Minuet wave 1, so you could have used that ratio 2.618 to get a decent target for Minuet 3. Then Minuet 4 unfolds. Now Minuet 5 is underway. Now you've got two lengths. You've got Minuet 1 and Minuet 3, and you've got the starting point for Minuet 5. So you can calculate a target for the fifth wave based on Fibonacci ratios of Minuet 1 or Minuet 3. I've tried 1.618 the length of 1, 2.618 the length of 1. Doesn't work for the fifth wave. I've tried 0.618 the length of 3, doesn't work for the fifth wave. There is no Fibonacci ratio between this fifth wave and either the third or first. So no matter what target calculation you would have used, it would not have given you where this wave ended. And that's the problem. You won't always see Fibonacci ratios between all actionary waves in an impulse. And when the fifth wave does not exhibit a Fibonacci ratio, this is the only way you can calculate it. And when it doesn't happen, then you can't do it. You've got to use support and resistance instead. So classic technical analysis could potentially have helped you find the end of this. The way I did it though is about 3 days ago, 4 days ago, I said what I wanted to see to indicate that this 5-step forward pattern was complete is I wanted to see a bearish candlestick reversal pattern and or a breach of this narrow channel that contained the 5-step forward pattern. This is a channel drawn using Elliott's first technique from 1 to 3 with a copy on 2. It's not properly breached by my conservative definition, which would be a red daily candlestick fully below and not touching the lower edge of the channel. We've got a green candlestick that's overshot the channel, part of the candlesticks in the channel, so it's not properly breached. But we do have a good bearish engulfing candlestick pattern for July 18. That tells us quite strongly that 1 is probably over and 2 is probably underway. Minute wave 1 lasted 12 days. I'd expect minute wave 2 to be about even in duration, maybe a Fibonacci 8, or 12 is just one short of a Fibonacci 13. So either 8 or 13 days, give or take 1 or 2 either side of those numbers, to see when minute wave 2 may complete. I'll expect it when it's complete to look like a very obvious 3-wave structure at the daily time frame, just like this 5-step forward pattern looks like a 5. 1, 2, 3, 4, 5. I'll expect this 3-step back pattern, A, B, C, to look like a pretty obvious 3-step back pattern. It's most likely to subdivide as a single zigzag. The next likely structure would be a double zigzag or a flat correction. So far, it's too early to tell you what structure it's going to be, and it's the best approach to corrections is don't worry too much early on, especially about what structure is unfolding, because there's just so many possibilities available. Just worry about trying to identify when the correction is complete. You want to identify the end of this because you want to know when this starts, because the next movement up should be a 3rd wave, should exhibit an increase in range, volume and momentum, and should be a lot longer than the 1st wave. The 2nd wave may not move beyond the start of the 1st below 0.3838. This is my alternate wave count. It's an absolutely good-looking valid wave count. I would say it's probably close to even in probability with the 1st wave count. Instead of a 5-wave structure and impulse unfolding, which is what the main wave count, 1, 2, 3, 4, 5 sees, what if it's A, B, C? If it's A, B, C, here we've got a 5-step forward pattern, and this sideways movement fits as a regular contracting triangle. A, B, C, D, E. E is now complete with an overshoot of the AC trend line. If it moves any lower, E may not move beyond the end of C below 0.2794. The point in time at which triangle trend lines cross over sometimes sees a reasonable degree trend change. That point in time in this instance would be mid-December this year. So mid-December this year, we could be alert for the possibility of a reasonably sized trend change for XRP. The target for this one, I've just recalculated it now that E has moved a little bit lower. 3.139 looks a lot more reasonable, doesn't it, than the first targets on the main Elliott Wave count. They're both absolutely valid Elliott Wave counts though. This is where cycle wave C would reach equality in length with cycle wave A, and there's a very, very strong tendency for A and C waves to be reasonably even in length. This is a bearish alternate. It's not my wave count. Someone else has published it online on YouTube, and subscribers here on my YouTube channel told me to go and have a look at it. I think it's got lots of problems in terms of subdivisions and proportion, but the biggest problem is proportion. 5 steps forward here. If the 3-step back is not complete here, and if it's continuing, then it's A, B, C, and the problem is the duration of cycle wave 2. Cycle wave 1 lasted 3.5 years. Cycle wave 2 has already lasted just under 8 years, and it's incomplete. It's only about just over 2/3, nearing 3/4 complete, and it's going to take at least another year or 2 or 3 to complete. It's going to be absolutely huge in terms of proportion to cycle wave 1. That doesn't mean it's wrong. It just means the probability, in my judgment, is really, really low. So I wouldn't publish this. This would not be an alternate I'd seriously consider. I'm just covering it just so you're aware I have considered it. Real quick, technicals for XRP on the daily at the last low here, a very strong bullish hammer candlestick pattern. Got some upward movement. Price broke above resistance, which is now support, 54.55 cents. Broke above what was resistance at 60 cents, and it's quickly returned back in, finding support today at the 54.55 cent area with a bullish long lower wick. So it's testing support in this area. It may be able to break through again here. It may be able to get down to 0.46. So far though, support at 55 cents is holding. Let's assume it's most likely to hold until it gives way. So far, price is now within a small zone of resistance at 60 cents and support about 55 cents. Volume was quite strongly pushing price higher up to the last short-term high, and then the last red candlestick has a decline in volume. That bearish engulfing pattern is a strong bearish reversal pattern, but it doesn't have push from volume. ADX is telling us there's an upward trend, which is not extreme. RSI reached oversold at the last low and exhibited very short-term single bullish divergence. It reached overbought at the last short-term high. It's back in neutral. So let's expect probably a bit more of a sideways consolidation or a pullback to relieve short-term extreme conditions. conditions before the previous upward movement is ready to continue. ATR is showing a strong increase as price moved up off the last low. Volume and volatility favour the upside. That's bullish for the midterm for XRP. That's it for me today with an update for you. I hope everyone is looking forward to an awesome weekend. Jack Frost will be with you tomorrow, Saturday. He gives you last analysis for the week of Ethereum, technicals only, and Solana. And if you want the Elliott Wave analysis that we do for Bitcoin and Ethereum, you'll find it on our website. I do Bitcoin once a week and Jack does Ethereum once a week.